We have Ian Prentice, who is the Managing Director of Technology Metals. Welcome, Ian.
Thank you. Thanks to Phil and Des and the Equity Events team for giving us the opportunity to have a chat to you today. It's quite unique for me being presenting here today with one of three vanadium companies presenting in the same session, so quite interesting. And I guess the great work that Gavin just did means that I don't have to dwell too much on talking about the uses of vanadium in the battery space. But we're developing a vanadium project in the Midwest of Western Australia. So different speed to what Gavin and Scott are going to be talking about, Scott talking about later on. We're a hard rock source of vanadium. So that's the traditional source of vanadium that's being mined in Brazil, being mined in South Africa, being mined in China. So standard processing route is what we'll be developing, but it's still very much around getting vanadium into the market for our cleaner future. And there we go. As Gavin was talking about, predominantly used in steel at the moment and really big emerging market going into batteries. Both uses are delivering carbon emissions savings, so it's very much a green metal for the future. Where we are, so we're a Tier 1 jurisdiction sitting in the Midwest of Western Australia, a very well supported mining jurisdiction. Again, thanks to Rob Murdoch, but we are a critical mineral and we are in part of the critical mineral strategy. We've received support from the Danish Export Credit Agency for $150 million of financing towards the equipment we're going to be using for our project. Very much focused on the downstream as well, a little bit like what Gavin was talking about down into the electrolyte side of things for the battery industry. And I guess what we're really focusing on being is the world's next large-scale primary vanadium mine. We do have a Tier 1 project. We completed a definitive feasibility study just very recently. We've completed what we call an integration study. So you see on the map we've got two separate zones of mineralisation. So Gabonintha is our main area of resource, and then we've just recently integrated the Yarrabubba satellite into that project. So very large, very high-grade resource, so 150 odd million tonnes, delivers over 25-year mine life. So we're going to be there for a very long time and producing around about 12,500 tonnes per annum of vanadium into the world market, using conventional processing, using the processing that's currently in operation in Brazil, so very much sort of off-the-shelf type of operation. We've completed pilot test work all the way through that process, so we know that it works. We know we're going to be producing a very high purity product, which is critical for the battery sector and critical for the high purity material that goes into the aeronautical sector as well. So, and I guess key for any project, that annual EBITDA around about 180 million Aussie per annum for 25 years. So it's a pretty attractive number. What we've also really focused on is Tier 1 jurisdiction, Tier 1 project, but it's also building a Tier 1 group of partners to develop that project. So a bit of a snapshot there. I've already mentioned EKF, which is the Danish Export Credit Agency. They're working alongside FL Schmidt, who are the leaders in this processing technology. So we'll be getting equipment from FL Schmidt. EKF will be supporting that through funding. So that's all part at the project level. Last October we announced a MOU with Tata Steel, and I'll touch a bit more on Tata a bit further into the presentation, but clearly a very highly credentialed counterparty in the steel industry, and for us to have an MOU to look at providing vanadium into the Indian market through Tata Steel is enormous for us. And then LE System is our Japanese partner in the battery side. So they're the guys we're working with to produce the high purity electrolyte and then move into the vanadium redox flow battery space. And I guess the two bottom ones, CNMC is we've got a current binding offtake agreement, so into the Chinese market. And APA Group will be building a gas pipeline for us to bring the gas to the project for the processing purposes. We're currently in what we're calling the implementation phase. So integration study was delivered in August. That updated the reserve, updated some of the metrics around the project. We've now gone out to tender. We're out in the market talking to the people who are actually going to construct the project, actually going to be building it in partnership with us. We announced our preferred tenderers a few weeks ago now. The engineering firm, FL Schmidt as an equipment supplier, iron mine contractors, to really fast track the implementation of the project, get that moving forward. The other key activities we're doing are really, I guess it feeds into the ESG component of what we all do. Very strong engagement with the traditional owners, getting that relationship really well bedded down. Say, plus 25 years of operation, the lead-in time to that, we're going to be up there for 30 years or more. So having that really strong relationship with the local Indigenous group is very, very important, and that's all part of progressing our environmental approvals as well. So ESG strategy, as Gavin was talking about, paramount. If we're going out into the European market for funding, if we're going into the Australian market for funding, ESG is really, really important components of all these things. So they won't look at the project until they understand that you've got a really good handle on your ESG. Despite, again, what Rob said in his earlier presentation. It's all about now is advancing our implementation phase, getting that project development ready and getting boots on the ground. The sustainability side, picture on the far right is our team standing outside our office in Meekatharra, so up there in the Midwest of Western Australia. We had a really good visit a few weeks ago, engaging with the traditional owners, really, as I say, really, really key in what we're doing in building all those relationships. Gavin did touch on this a little bit, but it is really, really interesting that the vanadium market is dominated by China and Russia. So, as it sort of says there, 78% of vanadium is currently sourced from China and Russia, and obviously they're not jurisdictions that are highly in favour at the moment. So, massive opportunity. We do have very large resources of vanadium in Australia, currently no production, and this is where the opportunity is to develop up that production base and then feed our product, domestically into the batteries, but also into Europe, into North America as primary markets. Going back to the Tata Steel relationship, this chart shows where steel production demand is going to be growing to over the next sort of 10 years or so. India is a big, big growth market. We see China sort of starting to come off, plateauing out, but India is going to be the big driver in steel production. But two things are really important, not only increasing in volume, but they also are increasing the quality of the steel that they make. So more volume means more vanadium going into steel. More quality means double down on that. So India is going to be a really, really important market for vanadium going into steel. But really importantly for me, I went to India in July as part of a WA government trade mission, and the eye-opener for me is that India is leading the world on renewable energy, generation and installation. Their forecast, they'll have more installed generation capacity in the renewable space than Europe by 2030. So for that to be efficiently utilised, they need storage, and they are very, very much aware of vanadium redox flow batteries. So India is a fantastic market for us, and having a partnership with Tata Steel, incredibly important. I won't dwell too much on that because Gavin did my work for me, so that's fantastic. These are brilliant stationary storage. They don't compete with lithium batteries. They're not for a mobile device. These are stationary, long duration energy storage, so ideally suited to your renewable energy. But what's happening in that space? China's been the leader in the space for a number of years now, putting some really big batteries around the place, consuming a lot of vanadium into that market. But North America, and particularly with the Inflation Reduction Act in the US, has really picked up the pace. So much so that Sumitomo Electric are building a battery plant in North America to benefit from the IRA. So we see really big growth of battery installations into that North American market. So fantastic opportunity. Hopefully Australia will catch up. Australian government generally is a little bit behind the pace on this, but we need these batteries coming in and supporting our renewable energy. So we'll get there. In the box there, it sort of indicates how much vanadium you need for every megawatt of energy storage. So what's currently on the drawing boards in the US, which is just the beginning of that journey, needs 35% of our annual production. So it's a really big emerging space. And then in China, and the really big interesting stuff for us is that the Chinese market is actually diverting a lot of their vanadium into batteries. So China's pretty well self-sufficient on vanadium. They produce a lot of vanadium, but they consume pretty well everything. So pretty well in balance. What we've seen in the last 12 months is a huge growth in vanadium going into batteries in China. So a whole bunch of the producers are diverting it into there, and you can see just some really big growth projections in the Chinese market. What we do know about China as a controlled economy, they will do that. It's not just speculation, this is what they will do. This has been dictated by the central government, and that's what's going to happen. So a lot of vanadium in China is going to be going into these batteries, which means opportunities for others to, fill the void with that demand. I quite like this chart. There's a couple of things on here. One's about that expected growth in vanadium and in vanadium redox flow batteries, and my numbers are slightly different to Gavin's, but the thematic's the same. We're seeing huge growth coming, huge amounts of extra vanadium that's going to be needed. You know, forecasting by 2031, so only 8 years away, that we're going to have a 45,000 tonne per annum shortfall in vanadium pentoxide production globally. We're looking at producing 12,500. I think Gavin was talking about 10,000. So between the two of us, it's only half of that shortfall. So huge market opportunity for us all. But the chart on the left is a really interesting one for me, showing the growth relative to some of the other battery minerals. So some of the ones that we talk about a little bit more, like nickel, manganese, and really looking at going, well, vanadium's actually got a far bigger growth trajectory into batteries than those, I guess, more common household names in the commodity space. Now, I touched on very early on, we've got LE System as our partner out of Japan we're working with them to produce vanadium electrolyte. So we've just successfully taken from raw ore at our project all the way through to really high purity vanadium electrolyte in Japan, in Tokyo. We've got a 100% owned subsidiary, VLite, which is going to be driving that whole process. And that's all about us building vanadium electrolyte capacity in Australia. And by doing that, it's like Gavin was saying, that then supports battery manufacturers to come into our market, and really does enable us to really roll these batteries out. Really importantly, the work we've done with LE System, they've actually got a commercial operating plant in Japan. So we've run our samples through their process, and we've come up with a better electrolyte than what they can do from their current feedstock, and it exceeds the specifications of any of the manufacturers. So we know we've got a product that can go straight into these batteries. Bit of a corporate overview. We've had a bit of a day on the market today, so we're up 30%. So we're 49 million market caps, not quite there anymore, a little bit higher, which is nice, but very strong position. Only 210 million shares on issue. We've been listed for 7 years. We've been very focused on progressing the development of this project, but also very focused on making sure every dollar is being spent wisely. We had 12 million at cash at bank at the end of the year, so still really well funded to get us through this implementation phase into financing for the project. The top 20 shareholders own around 58% of the company, so very tightly held, very strong supporter base. And the top of that list is Resource Capital Funds, so North American private equity group based in between Denver and Perth, and they did a lot of work in looking at our project and looking at the vanadium market back in 2021, and invested into our company at the end of 2021, been a massively, hugely supportive shareholder. So it's a very, very solid position to have a shareholder like that who wants to deploy more capital into developing this project into the vanadium space. A little bit on our board and management team. So Michael Fry, our chairman, and myself were founding directors. I'm a geologist by training, been in the mining industry for a little while now. Michael's more on the commercial side. And then more recently, we've brought Carmen Letton on, who's actually a Queensland local. Carmen's come on last August, mining engineer, fantastic CV, worked in some of the big companies around the world, and fantastic, I guess, application of her skills as we move through this development phase into production. And then on the management team, I'll just pick out David English, who's our Chief Operating Officer. He's built a number of large-scale mines in Western Australia, so he's got the track record of being able to deliver on that. But really importantly for us, he's also been involved in operational level on a vanadium mine in Western Australia. So they're fairly rare breeds. There's not too many people that have got the actual hands-on experience of operating these mines. So really, really important. And then I guess Alicia Civils, our CFO, who came on board late last year, came out of FMG. So one of the many that have left Mr. Forrest over the last 6 or 12 months. But fantastic add to the team. So she's really, really a brilliant person to bring in, again, to take us through this development phase, engaging with the financiers, really building up through to get into that development phase. So I guess, wrapping it all up, we are a very, very compelling investment. I think we're very leveraged. We're on a value basis. When you look at some of our peers in the space, we very, very strongly feel that we're the closest to production as far as the vanadium peers in the Australian market. Completed a DFS, about to complete our implementation phase, and then moving into financing. So very much on the cusp of starting construction. Fantastic location, fantastic project in the right sort of commodities. We are getting really good support from government agencies around the country. And the last point there, we do have a good range of tier 1 investors and partners, which has been a big focus of ours for the last 6 or 9 months, 12 months, to really make sure we've got that strength of customers and supporters to help us bring this project online. So on that note, I'll wrap it all up. Thank you very much.